And the late adopter. Hi guys, how you doing? Welcome back to the channel, to a new video. Right now we're doing Cardano minus 3.5% in red, but yesterday we did actually quite nice. I'm gonna show you why. We just pull up all the moving averages on the chart, so you can see this red candle over here. That's what happening today, but yesterday we managed to get back above the 20 moving average. I don't think you guys understand how bullish that is. That's super bullish. Now I know that we are very uncertain about the markets, whether the markets are gonna go up and down. You know, we are looking at Bitcoin, we are looking at Ethereum. We are not quite sure what's happening, but for Cardano, if the bull market continues, if Bitcoin decides to go just a little bit up, I think Cardano will explode, because it managed to get above the 20 moving average. It managed to get above this line of resistance over here. You can see exactly just above, exactly above the line. You can see right above the line, managed to get up there. So you know, it's a bullish signal after a bullish signal after a bullish signal. So I'm looking at Cardano and thinking bullish. That said, let's get into the charts. But before we do that, I'm trying to hit 30,000 subscribers. Do help me, press the subscribe button, you know, push me above that line, because that was 30,000 was before I started the channel, or at the start of the channel. I was thinking, like, at the end of the bull market I want to have 30,000 at least. So you know, once I get to that level, like, I'm gonna like, okay, I did something good in this run. You know, I did something good. Okay, let's see what's actually happening here on the chart on the Cardano right now. And you can see here that we are actually falling today back. We have been all the way down to back to 1.6, and I think a lot of people got kind of worried, cold feet and whatever. Maybe somebody sold, but we picked back up. This is a daily chart, so you know, it doesn't matter that much in the short, really short term. Maybe it does, but there is only one resistance, technically two resistances on the way up over here, that we have to break. So basically right now this is broken. All of these moving averages down here are broken. We are above everything, so technically the only thing we have to break is this resistance at 1.8, this resistance over here, and then this resistance up here at 2.3. Those are the only two resistances we have on the way up before we get into some kind of price discovery mode. We got still this wick on the top, but it doesn't matter that much. Once you get up here, this is called price discovery mode, and you know, you just try to figure out how far you can go up with the price. That's a very nice place to be, and we want to get to that place again, because I know a lot of people, you know, went all the way down here and not sure what's going to happen. But the fact that we managed to get back above the 10 and 20 moving average, like, this is the best kind of feeling you can have. We're gonna go down to small time frames, and there is some kind of triangle for me over here. Now I think a lot of people have been looking at this dump over here, and it's kind of throwing everybody off the table when they are doing tech analysis, because nobody's kind of figuring out what kind of pattern we are in, right? This is very confusing, because this looks very bearish if you consider it this way. You might try to do it some other way, you know, just connecting these two dots over here, but then you're not actually going through it. You know, all around it's really hard. But what I'm going to say over here is that we got to disregard this part over here. It's a dump that should have never happened. So we're gonna disregard that. Now we have to do it like this, and then we have to remove the moving averages, and we should disregard this this pattern over here. So this is, it's like never happened. Like, this should not have been there. It's only there to throw us off the table. Like, yeah, we're gonna trick you a little bit to the downside. But it is a nice pattern. This is a big red candle, this is a doji, and this is a green candle. This is something called morning star doji. These three candles in a row create something called morning doji star. It's a very bullish pattern. It's a reversal pattern. This is on the 4-hourly time frame. The best case scenario would be on the daily, but you know, you take what you get. It's a very good pattern on the candle. Let's see how this looks actually on the daily. We just got a big bullish candle, also good candle. Either way, it's a reversal pattern on the candle charts. That said, there is definitely some kind of a pattern going on here. Maybe something all the way up here. How are we going to draw this? Maybe something like this. Yeah, this is a better line. I think this is a very good line, because it's giving it some kind of support up here. Then you got some this touch over here. Then you got the resistance and resistance. So the line is decent, more than decent. And now comes the problem that nobody can figure out, is how to draw this bottom. This bottom line, because this isn't the line. I'm telling you right away, this isn't the line, and not gonna work out. But what I think it is, I think it's something like this. I think it's something like this, because it's touching this wick nicely over here, very nicely over here, touching this over here, and right now we are sitting on the upper side of this triangle. Now the thing with this is that, and the reason I know that this is the correct triangle is because I did analysis on other coins. I did analysis on Bitcoin, on XRP right now, and they all have the same triangle, and most of the triangle are actually confirming the bottom part as well. Now the Cardano is not confirming nothing yet. This might actually seem like a support, but we only have 2 touches up here, and then you have to use 3rd touch up there. So it looks decent. It looks like this might be it, and then that means you have to disregard this stump down here, and that's what we are doing. So we are going technically some kind of triangle over here. Now triangles are bad omen, and we might actually break the downside, because triangles are continuation patterns, not reversal patterns. Sometimes they can act as a reversal pattern if he has some kind of a rising ascending triangle, and they might act as a reversal pattern, but triangles are usually some kind of continuation pattern. So I would say this has more probability to downside than to upside, but there is so much bullishness that this can actually go to more to the upside than to the downside. It is so bullish that I think that this will break on the upside and not on the downside. But I'm telling you also where this has to go and to confirm the upside and the downside. So technically we are right now in this triangle, and let's put up the moving averages back on so you can see this. And we have some resistance, although we are above all the moving averages on the daily chart. You can see this over here. We are getting rejected by the 20. Maybe if we close below the 20 moving average on the daily chart, that's called rejection, because right now we're right above it, and then next candle right back below it, that's called rejection. It doesn't mean that we won't try it again for the 20 moving average, but you can see here on the 4-hourly chart that 100 moving average, the blue line over here, is giving us some problems at the same time as we are hitting this top resistance as well. So the good thing on the other hand is that we have the 10 and the 20 moving average coming to our rescue, and we are getting support on the 10 moving average. So we'll see if we can get out of it. Either way, doesn't matter what the moving averages are doing right now. We gotta get out of this triangle over here. When we're gonna do that, it's kind of difficult to say, but to confirm once we start getting out, I want to get above this level up here on the top. Not just the triangle. We don't just want to get out triangle. We want to get above this line up here at 1.85. That's this stop over here, very important. And on the downside, once we start going to the downside, I want to get below this level down here. Maybe I'm gonna give it all the way down here and say this level at 143. If we go to the downside, I don't want to go below 143, because if we go below 143, that's confirmation on the downside. To the downside, and we don't want to do that. So confirmation on the upside, if you go to the up, should come after 185, and to the downside should come after 143. But we are looking for breakout out of this triangle that's forming right now, and how this is going to play out. But just because we are breaking below doesn't mean nothing, because this can reverse to the upside again once it hits this kind of support. But if it breaks both the triangle and the support and goes all the way down here, that might indicate you know, bad times. But if you go upstairs, up as well, because this can always turn around, we want to get above the 1.85. Once we are up 185, you know, the moon is the next. So that's what I got for you. I watch this triangle very closely. It's both on for 1 hourly and 4 hourly. Let's see for 1 hourly chart. Yeah, we are keeping this 50 moving average, which is very, very bullish, and this can actually help us get above the charts. Let's see if no, there is no divergence over here. There's no any kind of divergence going on here. No divergence. So everything looks fine. Technically, everything looks fine. There are no problems in paradise on the technical side. The only thing we are actually interested in right now, are we going to go to the upside or to the downside? Anyways, come back tomorrow and we're going to know more, because tomorrow we're going to do a new Cardano video. Subscribe to the channel, get us to the 30k subs, and hit the like button on your way out. That's always a good thing. Thanks for watching. I do appreciate it, because you know my channel grows because you watch my channel. Thanks. See you around. Bye bye.